Welcome to the daily update. This is being prepared Monday, February 14th. Happy Valentine's Day, where we'll go over the action in the market today and then see how things look for Tuesday, February 22nd. And even though it wasn't a big down day, we were down 0.38%. It was just enough of a negative move to switch our indicators to mostly pointing down right now. There's so much uncertainty going on right now, especially geopolitically, and that's really causing a lot of problems in the markets. We had a positive backdrop, but as we continue to go down to even a little bit sideways, we're losing that advantage that we had. And I'll go through, talk about some of the charts, see how things look, and see if you've reached kind of the conclusion that I have based on what we're seeing right now. So just to go over what happened on Monday, we had a slightly lower open. Through the night, Asia and Europe just got hammered. That gave a negative backdrop to the S&P futures. They were down as much as 1% at one point. But as we got closer to the open, we saw prices come back just about to the unchanged level. There was still a bit of a negative overflow from the weekend because there's a lot of people who base their decisions on the weekends. Just like I've said, most of the times that people watch the videos that I upload are on the weekends because you have jobs, you have other things that you're doing. And so people make their decisions on the weekend. Well, they're reading the news, they're seeing what's going on, they're looking at some charts, they're trying to figure out what to do. And a lot of people decided to sell right at the open on Monday. So we did sell down to about the 43.90 level after prices opened on Monday. But then after we saw that initial selling, buying came into the market and came all the way back to the unchanged level. We were actually a little bit positive for a while. Well, that didn't last, and some selling came back in and took us back down to S1. We did see some late buying come into the market, and it took us about back up to around the 4,400 level. So we were down, we had been down more, but we came back. And since it's late day buying that we saw, we can take that as a little bit more positive. We closed in about the mid-range for the day, where lately we've been seeing on positive days, we close near the highs. On down days, we've been closing near the lows. Well, on Monday, we were just in about the middle. We were down 0.38%. We were below average on Monday. So there wasn't a lot of conviction. You've got a lot of people standing by just thinking, okay, I'm not really happy with any kind of a conviction right now, either up or down. So they're just waiting to see what will happen. The fixation right now is that the technicals are negative. And I watched a few other videos over the weekend, and you can make a case for either side, where we do have a bit of a positive backdrop, which is kind of a big picture positive view of things. And I pointed some of that out in the video that I put out for Monday. But you can also really make a case for things going lower from here. And a couple of the videos that I watched just said, well, it's pretty obvious, we're just going lower. Well, in the stock market, rarely are things obvious. There's so many different players. There's so many different variables that can happen throughout the day that nothing is necessarily obvious. We just have to go with probabilities. And so we might go up from here, we might go down from here, but looking at our charts, we have switched over to a negative stance, at least from what I can see. The earnings are still coming out, and that'll still last for a little bit of time. People, last week, they were all focused on inflation, and that's still at the forefront. And a lot of the things that you read online and news sources, they're talking about inflation as well as interest rates. But the geopolitical concerns between Russia and Ukraine, That seems to have backed off a little bit in the very short term. There's other sources that suggest that an invasion may happen on Wednesday. So then you have, of course, the Olympics, and then Canada is now coming into the picture as well, with all of the different things that are happening to our friends from the north. So there's a lot of different things going on right now. So what are some comments that we can make here? Based on where we're at right now, the short and intermediate term breakout that we were kind of looking for, that has failed. It didn't happen. In fact, in the very short term, you can say we put in a double top. And I'll point that out when we get to the charts. And then I also said, be aware of capitulation, which means, well, we thought we were going to go up, and so I give up. So now I'm going to switch and look at things more in the negative side. And that's just about the time things go up. We'll also be aware of assumptions where, like I said a minute ago, it's pretty obvious we're going down. Well, things are not always very obvious. So you can't assume anything when it comes to the stock market. You just have to trade based on what you see and make decisions based on what you see. Then I also point out here that that inflection point that was developing midweek last week, it pretty much has faded. We have to take that off the table for right now. And then on Monday, we did lose the 200-day exponential moving average. That was kind of our last moving average that I look at that was holding up after Friday. Well, with Monday's decline, we're now below that. The market continues to be overvalued. Even with dropping, we could drop 20% from here and still be overvalued. And if you look at some of the other videos that I have that talk about valuation and where we're at with things, we've got a long way to fall to come back down to historical norms. But I think that will be dealt with at some point. The big question is, are we dealing with that now? Or are we just freaked out over what's going on right now? And then we'll deal with these valuation levels further into the future. Our trend is strengthening because we had another down day, and the ADX is picking up that that's a negative trend. Our bias is negative and our momentum is negative. A lot of our intermediate term indicators that were still positive, they're starting to cross negative now. So let's look at the day's session as far as sentiment. And sometime I'm going to do a video that talks about all the different things that go into this. This is put out by CNN Money, and I found it a while back, and I just look at it, and it's really only good for helping us when we're at extreme positive or extreme negative situations. Well, we're not there right now. We still continue to be in about the midpoint. Then our VIX, because we had a decline on Monday on a closing basis, we're seeing fear increasing on the chart above, the line chart. And then on the daily chart, we're also going up, but we finished more towards the lower part because we saw that late day buying coming into the market. So I wouldn't read too much into that personally, even though we closed at the low for the VIX. It's still going up overall. Then the VIX of the VIX, we saw a little bit of a decrease in fear on Monday because we had some late day buying coming in. Our different sectors, the energy sector, it had a pretty rough day on Monday. The financial sector, okay, these are more value plays. Real estate were down pretty heavily. Then at the bottom, you had discretionaries actually up a little bit, and communication services were up a little bit. So we had 9 out of the 11 sectors down on Monday. Looking at our sectors chart, energy is still performing the best, even though it's been kind of gyrating around. It's up pretty strong now, and oil was up pretty strong on Monday. And so energy overall is still doing well since the highs that we set in January. And discretion, even though it was up on Monday, is still down overall since the high. As far as inflation, we have the BDI. It was up just slightly on Monday. Then this is one thing. In the video that I put out over the weekend, I was reading through some things that said that there was a shift. And if you look at this, this is what I was seeing. And I'm like, what shift? They were saying that it's more even now, whether they're even going to raise interest rates 0.25% or 0.5% at the meeting in March. And I went to the Fed Watch website, but this is what I saw. This was here all weekend. Well, it didn't update until Monday, and now you can see this chart. These are the same charts. These are both measuring the March meeting. So this is what it was before, with a 94.7% chance of a 0.5 to 0.75 point rise in interest rates at their next meeting. Well, when this readjusted, now it's really come down in the 0.5 to 0.75, and they're thinking, well, we're giving a 40% chance of 1/4 to 0.5% at the meeting. So there's a lot of uncertainty. You had a lot of conviction in this chart. Well, after one day, you're seeing things even out a little bit more. So we'll keep an eye on this, even though this meeting is still in the middle of March and we're in about the middle of February. We'll keep an eye on this, and as this changes, I'll bring them up in the daily videos. As far as our technical alerts, some were positive, some were negative. The NASDAQ crossed below 13.8. It was actually up on the day, or was it the NASDAQ 100? Let's wait till we get to the charts. Crossed below 13.8. I'm sorry, crossed above 13.8, then 13.9, then later down 13.7. So it's bouncing around all over the place. The S&P, this is the one that we focus on the most. It crossed below 4,400, only to come back and close just slightly above that level. Oil continues to go up, setting a 4-year high. It even went above 95. My goodness. Okay, and then the dollar had a bullish MACD crossover. After seeing the weakness, when we saw the news coming out of the EU and England, where they're going to get tougher on inflation, that sent the euro up and the dollar down. Well, ever since then, we've been seeing some rebounding with the US dollar. As far as our intraday chart, this is where we opened. We had a little bit lower open. We sold down here into the, I forget which, it's hard to see on this chart, around 43.95 or so. And we kind of camped along this level for a while. There was some buying that came in, took us back about to unchanged to slightly positive, but that didn't last very long. Then we saw selling come in, and it took us down to S1 for the day. But then after that, we saw some late day buying coming in. So you could see this as somewhat positive, because as we get closer to the close, you get closer to the reality of where the professionals want to take the market. So this could be seen as somewhat positive. Are we going to get any follow-through buying on Tuesday is kind of what we're watching for now. Right before I started recording this, I looked at the S&P futures, and they were up, not great, but they were up from Monday's close. Then looking at the bar chart here, where we do have this overhead resistance, this is looking potentially like a double top right here. And then another thing that I was looking at is, you could say on a more shorter term basis, here is a shoulder, here is a head, and we might be forming some kind of a shoulder, even if we pop back up. I'm not a big chart pattern person, this bearish pennant flag, blah, blah, blah. I'd rather look at the charts and get my context that way, rather than just trying to put these images onto a chart and then come to some conclusion based on that. I've never been a real fan of that. Now, some of you listening to this may disagree, and that's fine. It's just for the kind of analysis that I do. I'm not into, yeah, the head and shoulders, top and bottom, but I've seen just as many fail as I have succeed. So it's something that I don't really like to rely on all that heavily, although I like to know what's happening. All right, then we're down 8.23% since the all-time high. We're still underneath that 10% threshold to say that this is just a pullback right now. just a short-term correction. Well, if we continue to fall and we get into the 10% area, now we're in more correction territory where things look more decidedly negative. Growth versus value. Growth went up slightly on Monday. Value went down slightly. And then comparing the growth versus the value index, it had a little bit of a blip higher, but we're still below this moving average that continues to go sideways. The NASDAQ 100, it actually did okay on Monday. It was up slightly. As far as our trend, this is what I'm talking about with the ADX is crossing back over positive. It's going above the moving average. The red line is going up. The green line is going down. So that tells us that the ADX is picking up a trend that's starting to strengthen, and it is negative. Then the other one that we've been keeping an eye on that's really not telling us all that much right now is the mass index. After generating its first signal, going above 27, we're still waiting to see if it will come down to 26.5. Hasn't done that yet, so we're watching to see what will happen here. As far as our decision point scorecard, we switched. The one thing that changed on Monday was the PMO that had been positive on the short term has now switched back to negative, and I'll show you that here in just a second. But that's really the only change that has happened. But that just kind of feeds into our switching from, oh, we could be seeing a breakout to, wait a minute, we're seeing more of a developing downtrend right now. As far as our breadth, this also turned negative. We had a down day on Monday. Based on price, we're going lower. Based on volume, we're going lower. Even though it's less than what we saw on Friday, it's still headed negative. Our advanced decline ratio, it is negative and falling right now and still has some more room to go before we register some kind of an extreme reading. This is what really changed. The new highs, new lows. We saw a real increase in the new lows on Monday, and that forced this measurement to actually cross over and go negative. And it's a little hard to see, but our 10-day moving average is rolling over as well. This had been holding up. Well, after Monday's action, it's starting now to break down and look more negative. The same thing with the accumulation distribution. We're right about on this line. It declined a little bit on Monday, but if we break below that, that's going to be negative. And if this red line starts to turn down, that's also going to be negative. Our short-term indicators were well below the 20-period moving average, and both of them are now heading lower. Then our other short-term, intermediate-term, and long-term moving average study, we're going lower on the 20, lower on the 50, lower on the 200. Our other study that we look at, this is where we lost the 200 exponential moving average. We're not far below it, but we are below it. So we've lost the simple moving average and the 200, both of them. And some investors use the 200 simple, some use the 200 exponential. Well, we're below both of those now. This is the MACD, which had been holding up okay, but was rolling over after Friday, and we're just starting to get ready to go negative now. And the histogram is really falling down as well. Short-term oscillator, we're now dropping below zero based on price and volume. McClellan oscillator continues to be negative and could have farther to go down before it reads anything extreme. Stochastic RSI continues to fall, as does the Williams percent R. These are pretty touchy little indicators, so they move quickly. Force index, which I first introduced in the video from Monday, I'm going to keep this up here for a while. We are negative, and we are not really hitting either the upper or especially the lower band of the Keltner moving average envelope. So this potentially has more room to go down if we're going to turn more aggressively negative. Then the boom indicator, which I haven't shown in a while, I'm bringing it up because we're showing an extreme negative reading. pretty much across the board. This bottom one, we're seeing a real decline and does have more room to fall. Intermediate term, we're below the 50 with both moving averages going lower. 100, I'm probably going to take this off because we're getting far away now from this 100-day moving average, but it is continuing to head lower as well, and prices below both. Then this had been holding up pretty well too. The PMO has crossed back negative. That's why you have the decision point change in their signals. Based on price, we're just crossing over negative. Based on volume, we've already crossed negative. Then the other PMO study, the PMOs that are rising is declining, and the buy signals is declining, and those that are even above zero are also declining. So we're seeing some internal weakness now that's really flowing through. We'll have to see if this goes. Another sign here is the BPI, the bullish percent index. With Monday's decline, a whole lot of new point and figure sell signals were generated inside the S&P 500. Our rainbow, we're getting near the lower end. We've crossed over with our shorter moving averages. If we continue to fall, we're going to see a collapse of this whole ribbon that we've been really enjoying. If the market wants to maintain this upward pretty look here, things are going to really have to turn around and shoot higher, but they haven't yet. And you can kind of see a little bit. This could potentially be the area of a left shoulder. Here's a potential for a head. We'll see. Are we going to go back up enough to create a right shoulder to point to a point and figure? I'm sorry, a head and shoulders topping pattern? Maybe. We have to wait and see that play out. Then our stochastics, short term dropping, intermediate term dropping, and now the long term stochastics, the full stochastics, have rollen over and have gone negative, and they're below this line, which also confirms the negative reading. Summation index, we're falling based on price and volume. Then our different momentum studies. Some of these, the slope, yeah, it's still screaming up, even though price can't really justify that. Well, we're rolling over on some of these momentum oscillators. Our longer term ones are starting to flatten out. Some of them are starting to actually cross back down negative, and our short term oscillators are crossing over negative. CMF, I just brought this up because we have now switched to negative. We've gone into the red as far as the Chaikin money flow. And then, but we have this Pring bottom fissure that generated a signal a few days ago. We're just waiting to see if price is going to do something about that. The vortex, it had been looking positive even on down days. Well, after Monday, the green line came down and the red line went back up, and it looks like they may be getting ready to kiss right about in the middle. Then this is one that I don't show all that much, the money flow index, because it doesn't do anything for long periods of time, and then all of a sudden it does. This is just another momentum oscillator. It had been going up. Well, after Monday's action, it finally turned down. As far as our trading systems, we're negative on both now. The Elder system, which had been negative for a few days, our SAR had been hanging in there, but after Monday's action, it now has the dot on the top, which is negative. Our different charts, the Heiken Ashi chart continues to show weakness. This black candle is getting thicker and going lower. No change on the Kegi chart. We had the red line drawn in after Friday. It still looks the same right now. Renko, it's trying to hang in there with a positive box up here. We haven't moved low enough for it to switch over to a red box. 3-line break is still painting in a new black box here. So that is more negative. And then our equi volume, we're finally rolling over a bit based on the ease of movement 14 period indicator. It's crossing back below this zero line now. Point and figure, this has changed. It's not suggesting a double top breakout anymore. It's picked up enough so that 3 red zeros have been registered now, and this is looking more decidedly negative, but we still have the blue line underneath. So the longer term trend is still up, but we're seeing more of a short-term weakness in this chart right now. Then I showed this over the weekend with the Fibonacci numbers, and I just said, I'm not a real big fan of this because you can plot any lines anywhere you want and come up with whatever you want to say. I just measured here from a significant low up to our recent high, and we had been holding at the 38.2% fib level. Well, we broke below that on Monday, and we'll have to see, are we going to go back down here? These could be other areas of possible support. Long term, the special K, it's starting to roll over a bit. It had been hanging in there after Friday. Well, after Monday, it's recalculated enough to slightly start turning down. And here's the longer term view of that indicator. Broad market, S&P back down, mid cap back down into this mess, and small caps were down slightly as well. This is a concern if you are a growth fan, if you're a tech fan. The FANG stocks crossed over with the death cross, and even though they were up 0.57%, there's a lot of damage that was done in this chart, and we're going to have to see some real strength if this is going to look more healthy. ARC was down 0.71% on Monday, so the innovation that Kathy Woods tries to, do I say Wood or Woods? I think her name is Wood. The innovation that she's really trying to introduce into her philosophy, it's showing some real weakness right now, but she still believes in what she's doing. Then with the Dow, we dropped below the pivot on Friday, and we were down 0.49% with the Dow and closed more near the high, but it was still a down day overall. Small caps, they were down 0.35. So we're not seeing a real aggressive downturn with price in any of our indexes right now. It's just that things have been negative, and it's giving a chance for all of our indicators to recalculate and show more negative readings. Mid caps below the pivot and closed closer to the low on Monday. NASDAQ, it was pretty much unchanged. So you see nice little doji right here if you're into candlesticks. Pretty much closed right near the open. Could that be positive? Let's not get too excited about things yet. And the NASDAQ 100, it was actually up 0.1% on Monday, but it's still within this range, and it's got a lot of rising to do if this technical picture is going to start looking better. The Vixen, it closed near the low on Monday. There's a lot of increase in fear, but as we saw some late day buying coming into the NASDAQ 100, the fear really started to fall, just like it did in the S&P. And then the NYSE, we had been holding up. We'd been above the daily pivot. Well, we lost that on Monday. So that's a little bit more negative slant on things. And then this is a new chart. I don't really focus too much on the S&P 100, which are the 100 biggest stocks in the S&P 500. Those are the big boys. But I just wanted to point this out because even though we had a down day, even though we've been negative, the 100 biggest stocks really outperformed the S&P 500 on Monday, and it saw an upturn. This is just a relational study that I do between the two indexes. And I look at it every day, but I don't talk about it all that much. But because this went up, not really significant, but it was pretty healthy with the move up, I wanted to bring that up. Then the Wilshire, we're still kind of going back into the range where we've been before, but we were down 0.38% as well, just like the S&P was. And then our longer term charts here of some world indexes. China's kind of flattening out and possibly rolling over. The emerging markets are trying to turn up. Europe is trying to turn up, even though it just got hammered on Monday. Japan is trying to turn up, and the US is still trying to turn up with this longer term measurement that we use. Then taking a bunch of stocks together and putting them all in as one, we've been dancing around these moving averages. Well, we declined 0.37% on Monday. As far as the other broad markets that we look at, the dollar's been holding up fairly well. We're back into the 96 range. We're at 96.36. That's the daily chart. And so far for the week, with that advance on Monday, we were able to go back above this moving average. Oil, man, yeah, 95.46. My goodness, this is just shooting to the moon right now. And then gold, a lot of people breakout. Well, we still have some previous price that we need to deal with over here. And it could, and we're seeing the moving average start to ever so slightly cross above with the golden cross here. Silver still looking negative overall, and it was up 1% on Monday. CRB, it was up 0.89%. So this is continuing to go higher. And then Bitcoin, after coming back up, well, it declined on this chart as of Monday. As far as the different bonds, this is what I've been really keeping an eye on. We're seeing the 2-year spread just drop like a rock right now. And the closer we get to this line down here, may, not always, but may suggest a recession in the near future. And because the financial media has learned about this, if this happens, they're just going to be going crazy with it. So that kind of negates some of the impact that it will have. But we still want to pay attention to this anyway, but it just continues to go down. And then the other yield curve that I look at is really not helping us. And I pointed this out in the weekend video where it's continuing to go higher. But there have been times in the past when this was pretty useful, but it's not useful right now. And then I brought this up. Oh, no, this is new. This is Fibonacci retracements based on the 10-year. And for a long time, I focused on the 30. Well, to get more of an apples to apples comparison between the US and other countries, now I focus more on the 10-year. And we broke from the all-time high that we set back in 2018 to the all-time low that was set in 2020 during the COVID plunge. We're looking at a retracement here, and we broke above the 50% retracement. Are we going to continue to shoot higher? This 19.96, you have to move the decimal over once. That's 1.96. I don't know why they do that, but they do. So this just shows that we've broken above where we were at before, and we may be going higher with the 10-year yield. Or a lot of people see this, and we might see some buying coming into the bond market and see prices actually decline a bit. Our yields, they went up on Monday with the 30, the 10 that I was just talking about, the 5, which is getting very close to the 10. The 2-year also increased. And then here's the 3-month. This is what we're just really watching here, is it's just screaming higher. But what we're paying more attention to is the 10, the red line to the blue line right now. That's what's really declining at the moment. International rates, US still has the highest interest rates. And even though it declined a little bit on Monday, Germany continues to be positive for the first time in a long time. Bonds overall, they were down 0.56% on Monday. If you bought them based on price, when these go down, that means that interest rates go up. And then our Dow Jones corporate bond index, we saw prices on the bonds go down on Monday, 0.73%. And then I took out a lot of the relative studies that I did over the weekend, but I want to keep an eye on one of them, and that is gold to the S&P 500. We've been in a solid downtrend when you relate the two to each other. Well, we saw a bit of a fake out move that came back down. Well, we're seeing that breakout again. And so we're going to keep an eye on gold. We're going to keep an eye on everything else and just watch and see how this goes. If this continues to go higher and the blue line crosses above the red, that means that on a relational basis, gold is getting stronger than the S&P 500. So what can we look for on Tuesday? The positive backdrop that I was harping on there for a few days, it could come back. If we have a really strong, a good Tuesday on good, healthy volume, things could turn back positive. We're not decidedly negative. It's just that we've had enough downward pressure to this point to where things have no choice but to slip over and go negative. Now, if we see some really intense selling on higher volume, that will just confirm what we're seeing now. But it doesn't mean that the positive backdrop is gone. It's just, it's for right now, it's slipped away, but it could come back. The long-term trend is up, but then I went over this in some of the charts on the weekend, but showing signs of weakness. And we're getting to some interesting levels right now on those charts that we want to keep an eye on. We still have earnings season. The battle continues between growth and value. On Tuesday, we do have the producer price index that'll be coming out, and that can be a real market mover. Consumer price index, that's what we all pay as far as inflation and how prices move. Well, producer, these are things, companies that make things. What do they have to pay for what they buy to produce the products that we go buy at the store? And then the different geopolitical events, Russia, Ukraine, at least the last time I looked, because this is changing all the time, it seems to be settling down a bit. We do have the Olympics that continue. We have the Iran meetings, which I really haven't heard anything from. And then Canada's they were heavy in the news over the weekend with all the trucking stuff that's going on up there and the different methods that the Canadian government is trying to use are really looking very threatening to a lot of freedoms. And they don't enjoy as much freedom in Canada as we're supposed to enjoy in the US. And we're just wondering, is that going to bleed over somehow? So we want to keep an eye on that. So what can we conclude? The S&P is now negative. I was mixed after Friday. I've now switched to negative. The breakout is appearing less likely and the technicals have weakened. So on a short-term basis, we're now negative, intermediate negative, and the long-term basis does remain positive, but showing signs of weakness. Sound like a broken record when it comes to that. So thank you very much. Have a wonderful day, and I will talk to you again after Tuesday's close.